What does a sudden doubling of Nvidia AI chip prices on China's grey market tell investors? It signals that demand for cutting-edge compute is still intense, even when official supply is squeezed. Here's the context. The US began restricting shipments of high-performance Nvidia GPUs to China in October 2022 and tightened those rules in October 2023. Since then, official channels have narrowed, but a parallel trade has flourished. The Financial Times reports that prices for restricted chips have roughly doubled in that grey market, reflecting scarcity and the urgency to secure compute for AI training and inference. This matters for markets because AI hardware sits at the center of earnings expectations across data centers, cloud platforms, and software ecosystems. A sharp grey market premium signals pricing power for top-tier accelerators, yet it also hints at capped unit volumes into one of the world's largest AI end markets. That tension can make revenue forecasting for chipmakers and their suppliers more volatile. The shift in channels also changes competitive dynamics. Buyers that once relied on predictable allocations now chase indirect and resale sources. Immediate delivery commands a premium, and access itself becomes strategic. As a result, price dispersion grows across regions and vendors, and the value captured near-term tilts toward hardware providers, networking gear, and advanced cooling, where bottlenecks are most acute. Credit and ETF investors should read the signal carefully. Elevated margins can support credit profiles for select chip and component makers, but policy risk remains a persistent overhang. AI and semiconductor-focused ETFs may see sentiment swing as investors weigh stronger pricing signals against policy-driven volume uncertainty. Meanwhile, software names may face timing risk if compute constraints delay deployments and revenue recognition. For portfolio decisions, focus on a few practical steps. Track pricing and lead times for flagship accelerators as a real-time gauge of scarcity. Stress test data center growth models for both higher average selling prices and lower shipment volumes. Look beyond the GPU to potential beneficiaries in interconnects, power delivery, and thermal systems. Diversify regional exposure and discount cash flows with a policy risk lens, recognizing that rules can change faster than supply chains can adapt. In short, scarcity is setting the tone. Prices say demand is strong, but access is the differentiator. Investors who monitor the bottlenecks will better anticipate where value gets captured next. Read the full article at finlitica.com. Quick reminder, this is general information, not financial advice. Your money, your decisions, so always do your own research.